Good afternoon, colleagues. They've asked me to speak to you today about growth and productivity through mobile innovation. And as a subset of that, they've asked me to look at the best technology response in what they call this rapidly changing technological environment. They've also asked me to try and unpack this navigation through the evolution from existing technology to emerging technologies, and then finally to conclude with how mobile innovation can drive growth and productivity. On the issue of growth, I'd like to say to you that growth is a good thing to chase as a business, but I can tell you that with growth comes scale and the responsibility that comes with that. And what I mean by that is the responsibility to take on a better focus and a more urgent focus on things like enterprise architecture, scalability with the right levels of agility. High availability becomes important to your customer base as you grow that base. Uptime becomes important, and there has to be a renewed focus on customer service, and that customer service has to be delivered on a completely different level once you achieve scale and growth. I almost want to say to you, when you anticipate growth, be careful what you wish for. I want to say to you, if you're indeed chasing and looking for growth, it's best you prepare. And there are concepts like operational and service management scale, which you will take on and find you'll be meeting at an unprecedented level. I want to pause for a moment and say to the CEOs and CFOs in the room, if the concept of service management is something that is foreign to you, and I want to say to the CTOs or the CIOs who might be in the room, if your CFOs and your CEOs are fighting with you about this very important concept, then you need to be very concerned. I can say to you that you cannot grow or scale without an effective operational management framework. Another thing we forget as we anticipate growth is people. This must be the most important thing as technology evolves. Skills development, retention is absolutely key. And you need to look at this as a long journey, and you need to take your people along with you as you embark on that journey. When growth comes, I can tell you that it does come very quickly. And more often than not, this growth and the growth of the business is not about technology, but in fact it is, I'd like to say to you, the effective management of technology. So let's talk about growth and scale in an ABSA context. In 2011, ABSA online banking processed 1 trillion rand in transaction values. Now that's a number I have difficulty understanding. So you'll see in the illustration over there down in the bottom right-hand corner, 51 million rand, 16 stacks of 200 rand notes as tall as the average person's height, about 1.75 meters. My surname's Goliath, but I'm slightly shorter than that, unfortunately. But really, that person there has, in 200 rand notes, has 51 million rand stacked up alongside him. If you consider 1 trillion rand worth of 200 rand notes stacked up next to one of our significant landmarks in Johannesburg, the Hillbrow Tower, which is about 269 meters high, or 153 people high, it would be equivalent to 127 towers, each tower made up of 16 stacks of notes. And that's really when I start looking at that picture, I begin to understand what the scale is all about, what this growth is all about. They also say that a woodpecker hammers a tree with its beak 20 times per second. In our online transaction environment, ABSA online banking now processes 27 transactions per second. If you consider growth in the online space, again in the ABSA online banking space, we're seeing 9,000 concurrent users at peak. And if you were to place 9,000 laptops alongside each other, you would find that they would span the length of the Table Mountain Plateau, which is about 3 kilometers wide. So I've paused on that for a moment to try and illustrate to you the importance of service management and operational excellence. And to the CEOs in the room, I'm really hoping that that little message and the illustrations there will make it clear that when you scale, you also need to manage well. This is a picture of Table Mountain. On a clear day, you can almost see those laptops stacked alongside each other. But really, that is the view I enjoyed while I was living in Cape Town. About 2 minutes from our home, and it's the most wonderful experience to be so near the sea. Last year, I moved to Johannesburg, and I swapped views. So I don't think those views are comparable at all. But I do think that inside of that picture lies the opportunity of scale. Because when I look at that, that really shows me and gives me an idea of the extent of the scale and the customer base we have access to. And that is the picture of Johannesburg. And really Johannesburg, I think we must agree, is the gateway into Africa. So at the Cards and Payments conference this year, they've asked me, as I said earlier, to unpack this thing we call the rapidly changing technological environment. And if you go to Google and do a simple Google search and you omit the biased views you may find when you search for something like technology trends in 2012, and also depending on your personalization and preferences you've set up in your browser, you'll find that CNN, for example, puts lots of emphasis on mobile. You will find that IT Business Edge also puts all the emphasis on mobile. You will find that USA Today gives an independent and unbiased view and puts all the focus on mobile. And when you start bringing all those things together and you ask, so what are the top 10 tech trends predicted for 2012, you will see that they are very, very squarely focused on mobile. And if we start unpacking those, I think that social networking has to be one of the most important things. And I want to just go through this a little slowly because I do believe that this is vitally important for our online, our mobile, our interactive environments. It is said that mobile social networking is the fastest growing consumer mobile app. And an organization like Forrester, where they are tracking 19 of these things, have indicated that this is indeed the fastest growing consumer mobile application. It is also said that social network platforms are becoming portals in their own right. They're becoming transit hubs, cloud storage. They're starting to keep email communication, all kinds of media like email traffic, video, photos, games, and commerce most importantly. They also highlight that these social sites will be driven towards providing services in partnership with third parties. And I think we need to think about that as an audience, as players in this industry. How do we insert ourselves into that value chain? And I emphasize again, in partnership with third parties. The people in the room today need to be the third parties in this important aspect. In an ABSA context, we have developed what we call a comprehensive online reputation management program. Long words, fancy words, but in essence here, in a mobile or in a social context, ABSA, for example, in Jan 2012, was mentioned 5,000 times online. So if you're not closely engaged in the social space, you're going to miss the conversations your customers are having with you or trying to have with you and about you. Interestingly enough, 3,000 of those messages were on Twitter. Our response, on average, within 30 minutes. Full resolution of customer problems, normally on the same day. And of course, your comprehensive online reputation management program would be incomplete if you didn't also have a presence on YouTube and LinkedIn. And incidentally, LinkedIn is the place where we've identified some of the best talent that we've brought into ABSA. I think F&B, if I may mention that, I'm from ABSA, but I think F&B is a really fine example of how channels have been integrated and the social media space has been used effectively. 2 Sundays ago in the Sunday Times, this was the spread. F&B in traditional media advertising started talking about their product sets and about their capability. The very same morning, Michael Jordan, the F&B CEO, was retweeting a tweet which came from one of his excited customers. And this guy was really saying that he finds these ads really bold, simple, and visually appealing. There's a very close customer engagement. I think F&B has done extremely well in this instance. So if I go back and look at the other elements of these 10 tech items for 2012, mobile search is an important element. And mobile search really goes hand in hand with product search. This is about giving customers the ability to perform price comparisons. And when they've done that, they can check product information. And the next evolution of this mobile search capability will really allow users to start performing actions, a call to action, making a call, making a reservation, buying that ticket, placing an order, all enabled by a very capable and well-scaled payment system. Mobile commerce today, I think if we're really honest with ourselves, mobile commerce is really an extension of e-commerce. perhaps in a smaller form factor and perhaps suited for that mobile device. But in the future, it is said that the emergence of uniquely mobile functions, the ability for someone with a mobile phone to walk into a retail store and say, I'm here, identify himself to the store, add items to a shopping cart simply by pointing the phone camera to the item or scanning a barcode, all enabled by a very well-scaled and managed payment system. Mobile payments, an interesting tidbit here in Nigeria, in Africa. The Central Bank of Nigeria, CBN, has now launched and established what they call the cashless scheme. It's up and running, it's been established in Lagos. The objective here, quite simple, to reduce the amount of cash used in transactions. To reduce the amount of cash used in transactions. And you can see how this has been driven into the market. CBN has indicated some guidelines. They're saying to individuals, in other words, non-business, if your cash transactions exceed the equivalent of $923, we will apply a 10% penalty. Obviously dissuading people from using cash as a form of transaction and payment. For companies, they're saying, if you exceed 1 million NG in the local currency, we will apply a 20% penalty. And this is one of the key drivers for having pushed mobile in Nigeria. And we can see, if you look at the numbers, if you look at all the stories, and look at all the case studies, you can see how mobile has grown in Nigeria, assisted by this kind of drive. So how do we serve the market segments through digital channels? Not a complicated picture, but on the right-hand side, you can see our market segmentation, all the way from the underbanked through to small business, into the affluent market. I think the thing to note here is that in the underbanked and entry-level markets up here, you can see that the use of mobile dominates. Slightly different picture, multi-channel, serving multiple segments via payments. So as a bank, we of course have multiple payment capabilities. Again, if you look at the market segmentation picture over there, you can see Cash Send, for example, a service that we offer to our clients in Western Union, is used mainly up in these lower segments of the market. So I want to talk about Cash Send. So Cash Send was something that was developed and launched in 2008. So on the face of it, it looks like a legacy service, a legacy capability. There are other banks who do this as well, and they do it a little better than us in the fact that FNB, for example, has a wallet capability attached to the service. But Cash Send, by definition, is a cardless ATM service. This is a service that enables 10 million ABSA customers to make payments to any individual in South Africa. The only provision is that this person needs to have a cell phone, any cell phone capable of receiving SMS. The service, very simplistic, it's cash in and cash out. In terms of payment origination, we have some 5,000 ATMs across our national footprint. So the initiation can be done by an ATM or via internet banking or via mobile banking. And that really plays to the anytime, anywhere, anyhow capability. Cash out for the person receiving the cash simply walks up to an ATM, punches in a few numbers, and the cash is delivered. So do our customers like this? If we look at the initiation per channel, we've transacted some 600 million rand in transfers. The important thing to note here is if you look at the April 2010 to April 2011 year-on-year performance, you'll see that cell phone banking has grown to 39% versus a mere 13% in the previous year. Very important, very significant, and talks to the sheer convenience, capability, and adoption of mobile services. A slightly different way to look at this is you can have a look at the red line over there and see that cell phone banking started eclipsing ATM initiation in the middle of last year. So does the industry like this? We think the number of awards that we've won for this quite legacy service is an indication that it's a service that makes sense. It's a service that's being applied in an effective manner. And this has also led us then to go and re-look at what we've done with Cash Send and go and extend the capability and take what is a consumer service into the business market. Two services in particular, one Cash Send Plus, aimed at small business, and this really allows business to the ability to pay, for example, in the South African context, I think it's quite relevant to pay casual workers, and there's no need to keep cash on site. We all know the security risks in South Africa, especially in Johannesburg. So this service has been extremely useful to our small business customers. And then we have the bulk cash send through, cash send plus. And this really is for application in large corporates. Very simple. Think about a large corporate taking a bulk file and integrating that with our cash send system. So we've taken a legacy system and we've developed that, and the revenue speaks volumes for the success we've managed to achieve there. So it's Sunday morning and my gardener in Cape Town, ABSA, sends me a please call me, reminds me that he needs to be paid. From the comfort of my armchair on a simple cell phone, I'm then able to go through a 4-step process and I'm able to pay ABSA, and I've just made a payment to an unbanked recipient. That's cash send. The simplicity in the redemption process, ABSA walks up to an ATM and he goes through 4 steps and he gets the cash. That same simplicity has been extended and embedded into our online payment capability. What we also find now more and more is that more of our customers are starting to send cash to themselves. Either they've forgotten their wallets at home, but as long as they have a cell phone, or for security reasons, they're able to send cash to themselves, walk up to an ATM and do the redemption. Also the capability, obviously, of finding the closest ATM is embedded inside of that user experience. So if we go back and have a look at the top 10 tech trends again, the temptation is very strong to want to do everything. And we ask ourselves the question, should we be doing everything? I'd like to turn your attention to the Jan 2012 issue of Electronic Payments, where the editor, James Ratcliffe, writes his editorial note, and it's entitled, When to Lead and When to Follow. And so as I contemplated that for a while, I drew this picture for myself, and he talks about this thing called innovativeness. And he's quite concerned about even using a word like that, but it really talks about technological innovation. On the one end of the scale, we have the early adopters. On the other end of the scale, we have what we call the laggards. The early adopters seem to be weighted in the majority, and this is where we think we have things like thought leadership, all things progressive in the business community, the willingness to embrace technology and run with it, and to establish strong market positions. On the other end of the scale, we have the chasing pack, as he calls it. This is where everyone's trying to find their feet in the market, and these companies are often referred to as slow, uninspiring, and cautious. The interesting thing is, in that lies a paradox, I think, in the fast-moving world of IT, the early adopters and the laggards. The interesting thing we note is our customers are saying to us, as a bank, we expect you to be deliberate, considered, and safe. And that places us as a bank firmly on the side of the laggards. On the other side, we have the first to market, companies grabbing market share, but also adopting lots of risk. On the note of innovation, I'd like to say to you there are 2 important points to consider. 1, be sure to pace yourself. 2, keep a beady eye on ROI. If you have a look at the period 1996 to 2010, ABSA as a bank had quite a number of firsts. I think quite an impressive list of firsts in the market. In 2011, if you've been watching the media and wondering what's happening with ABSA, we've taken the time to re-platform. So we've made significant investments into re-platforming all of our online, all of our digital capability in preparation for taking on new technologies like NFC. You may have seen our media release last year, mobile banking redesign, and then migrating all of the existing products onto that new platform. And when we look at the impressive list of awards, awards are simply, in my opinion, an affirmation of market relevance and customer acceptance. So when you start putting things out into the market and the awards come and the customers stay, you're sure you're doing the right things. And sometimes I think that the KISS principle is probably a good one to observe, especially in the current economic climate. KISS, keep it simple, stupid. And that quite simply means, in context, look for productivity gains in existing areas. A great example of a productivity innovation is this little thing we call Tassie. Now, I don't know if you can see the image from where you are, but Tassie is the Afrikaans word for a little case. And this little device was given the name Tassie, and it really allowed our external sales consultants to go out on site and to open up accounts, to change customer PINs, and it was a great way of selling savings accounts. There came a time when this required some enhancement, and of course it was built on an old platform, and so we moved along to our remote account opening capability. On a tablet, we have workplace banking fully enabled, and it is a simple 5-step process that allows our agents outside of a branch to identify and verify customers, to capture customer applications, to capture the supporting documentation, to accept the contract, and to get the client information and enable the customer right there. I think the important thing here is that it now takes 7 minutes, 5 to 7 minutes with this capability to open an account at a cost of almost nothing. At the Cards and Payments Conference, there is a need for me to look at the second point, I think, quite closely, how to navigate the evolution from existing to emerging technologies to guide investment planning. I want to say that perhaps updating legacy processes and systems, especially items like TASI, is perhaps a good idea. Not to throw out all the good ideas, but to go and reinvest in existing solutions and re-platform only where it's necessary, to focus on growing existing revenue streams, to apply innovation to existing products. And you might find, like we have found, that you may end up exceeding your initial ROI expectations. If you have a look at something as simple as cell phone banking, on the left-hand side you can see the most simplistic form of banking. So we're talking about USSD, we're talking about SMS-based cell phone banking. We have seen in 2011 some significant growth, even in this area. So the reason I asked if you've been to Barcelona, if you've been to Barcelona, you would have seen all the latest developments in mobile banking. Sometimes not all of that is completely applicable, especially to a market like South Africa. 3.1 million customers and fast heading to 100 million rand in revenue. If I have a look at CB Lite, the simplest service, we've seen revenue grow by some 66%. We've seen transactions go up by 81%. And we've seen our customer base in this market segment increase by 36%. In contrast, something a little more advanced, if I might say, WIG and web banking, we've seen only 14% revenue. So we think there's room for growth over here. So this is something that needs to be milked. So what's next in this technology landscape? For ABSA, future direction, if I consider our 4 channels, it is internet, mobile, messaging, and self-service channels. In the internet space, we are about to launch our brand new transactive, interactive, new banking capability, which will have an element of PFM. I'm sure you've been watching the 24/7 space with some interest, and you'll be looking at how the banks have been responding to that. I'd say please watch that space. In the mobile area, NFC is a key item for us, as is contactless payments. In that context, mobile wallet, mobile applications for smartphones. And then a service like this, a banking service, needs to be supported by a very effective messaging platform. So we've gone about overhauling our entire messaging capability. In the self-service channel, an ATM might look like an old device, but we've given some new vigor to that and some new relevance to that, a new ATM stack, some new software, some new capability, and a scan and pay capability where you'll be able to walk up with, for example, your multi-choice account, scan that at the ATM and make the payment right there and then. Final question here, how can mobile innovation drive growth and productivity? I'd like to say that growth and productivity must come through mobile innovation, and that will be from Cape Town into Africa. But I do think the mountain is a slightly steeper one than Cape Town, and I do know that it is a journey that we need to enjoy, or an expedition. Thank you.